pre-settlement inspection is to confirm that that property is in the same condition as when you bought it. Any conditions in your contract have been fulfilled. So for example, if you had agreed to any works being done, making sure that's been done. If you've got a clause in there to say, I don't know, all the rubbish in the garage is going to go, making sure that's been done.
If you meet someone and they say, I've got a fear of flying, and then when you speak to them, what are you thinking about? What are you visualizing? Got a plane crashing and people crying at my funeral, my plane's exploded. And it's like, well, yeah, you probably would have a fear of flying. And if you're overthinking minor defects on a building,
I love that this is your analogy, Pete, for minor defects on a building inspection, a plane crash with people.
Well, that's what it feels like, because in their own words here in the statement, not question, I'm overthinking, quote, minor defects. So, but you've already sort of diagnosed the issue here. They're minor issues and you're overthinking them. I know what they're saying. It's human nature. But how do you delineate between something that's a deal breaker, something that's just to be expected given the age of the property, and something that you just really need to accept is wear and tear? G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Allen Wargent Property Buyers. I'm here with Amy Lunardi, and just as we start recording, my next door neighbours decided it's the ideal time to start running his whippersnapper, of course. So hopefully you won't get any background noise there, Amy. Good to see you. How's things with you?
Yeah, good. I actually had my lawn mowed this morning. I said to him, I've got a podcast recording at 10 o'clock, so we've got to be in and out before then. But if you have been following my lawn journey on Instagram, Pete, I'm sure you haven't, but
a little bit, yeah.
A little bit,
I must admit, I don't do the TikTok, but I do follow you on Insta.
I don't do the TikTok either, Pete. I did a little bit, dabbled in COVID, but...
Yeah, my kids keep asking for it. No, you can't have TikTok, so...
That's fair. But I did, I went through a little rough patch. I didn't water my lawn for 6 months in January, and turns out that's a problem, and it went brown and patchy, and it's taken this long, 11 months later for it to recover. We did a lawn renovation recently. Have you heard of that before? Lawn renovation?
Well, I've seen people get lawns completely relaid, and obviously in the cricket in Melbourne, they've just done exactly that for the MCG ahead of the Ashes.
Oh, really?
But I don't know about a lawn renovation. Is that something different?
Yeah, I'm new to all of this. It involved like cutting it right back. It looked terrible for a little while, and we've been fertilizing it and doing other things to it. I'm not sure. But I'm pleased to say it's looking fabulous now. It's very satisfying to look
so that's what they do on the golf course.
Lawn. Okay.
Yes.
There you go.
Yeah, sorry, I spoke right over you. But yeah, they do that once a year on the golf course, right? It looks terrible for 2 weeks, and then it comes back better once it's been reseeded.
Yeah, there you go. So yeah, that's the highlight of my week, Pete.
Well, it's probably more exciting than what I've been up to, mainly kids' play dates and things. And probably like yourself, trying to get everything finished ahead of Christmas. So we thought not a bad time to go through some Q&A. We've got some listener questions. So always do send in your questions. We do like to cover whatever's topical. So we've pulled a few of them together for you, and we'll run through as many as we can in our allotted time. So, Amy, let's jump straight into it, shall we? So here's a question. Has anyone ever changed their conveyancer after they've made an offer, but before settlement? So the question says, we had a recommended conveyancer, but they've the process hasn't worked out particularly well. And now we want to change conveyancer, even though that's what's gone onto the contract, is their name and details. I think I'm just trying to think. I think I have actually. I've ended up changing a solicitor during the process before, but that was in a property in the UK where sometimes the process between offer and settlement can be so drawn out that sometimes people retire or they end up moving to another firm, and you end up getting a new conveyancer on board. But I haven't had to do it because the conveyancer's been negligent or not up to the job. Is that something you've come across, Amy?
Yeah, and I think this is a really great question, because I'm going to take this question and apply it to any service provider that you're using when you're purchasing a property. For example, a mortgage broker or a buyer's agent. So the key things is to understand is what have you signed so far in terms of your obligations and your costs? Because if you've signed up with a conveyancer and you've committed to paying a certain fee and they've got terms and conditions or whatever it is, then you need to understand that. And with changing conveyancers after you've purchased and they're on the contract, It might depend on where they're up to in the conveyancing process in the background. I don't really know if there's like a point in time where it's like, oh, it's too late. We've kind of done everything. We're going to charge you regardless. So I would say in that case, understanding what fee structure they've given you at the start, any kind of documents you might have committed to or signed, or terms and conditions. And then you can speak to a new conveyancer or solicitor and say, hey, I want you to take over. This is where I'm up to so far. Is that possible? And this is also, this is actually probably more common when I'm speaking to clients and they're working with, say, a mortgage broker, and they've just been really unhappy with their service, their communication. They've made mistakes and that person's lost faith in them. And when you're buying a property, you need to have faith in the team around you, in your A team. So at any point in time, you might decide at the very start to give them one more chance and say, hey, I'm not been happy with XYZ. Are you able to, work with me to fix this? But otherwise, I really think that if you're paying someone a service, and mortgage brokers, you're not necessarily paying them direct, you're paying them indirectly through them writing the loan, they get paid by the bank. You need to be satisfied and confident. And if not, I do suggest shopping around and going elsewhere. Even with a buyer's agent too, I've fortunately never had a client tell me they're unhappy with my service and they want to move on. But if they ever did, I would say to them, like, that's no problem. Let's come to an agreement. Again, depending on how much work we've done so far, depending on their reasons for, leaving. So don't feel like you're stuck. Oh, and last one, Pete, this also applies to property managers too. If you have bought an investment property, you've got a property manager, you're really unsatisfied with their service, you can move. It's very easy to move property managers. Again, check your authority, but most property managers don't have like a continuing authority after you've leased it. You can just move, and your new property manager does that awkward job of breaking up with the old one for you.
Perfect. Good advice. Thanks, Amy. So,
have you come across anyone, Pete, that's like come to you and said, oh, hey, Pete, I want to work with you. I've got a broker, but I've not been very happy with them. Have you encountered that much?
Well, I've had it as a buyer's agent where somebody's engaged my services and then they found a property themselves and they just want to go ahead and buy it. And then,
okay, well, this is a bit different.
In those situations, it kind of depends on, how far into the process are you, and, how much work have you actually done? If you've sunk months of work into the process, you probably need to negotiate something. But it kind of depends really. But I haven't had the situation where somebody hates the process so much with a conveyancer or something like that. So but if you're in the industry for long enough, I guess you do get to see everything. So interesting one. Question: why so many properties in Sydney sold via auction? Again, it's generally better for the seller. Is there any advantages for buyers, or is it just the default system and we have to live with it? It's one of the interesting things that when people come across from the US and they see this sort of big grand street theatre of a Sydney auction, crowds, and someone's brought a coffee cart along and they think this must be a bubble. Like nobody does this in Austin, Texas. So this has got to be the sign of the peak of the market. But then people have been saying that for as long as I've been in Sydney, which has been over a quarter of a century now. So I think, I think it is to a certain degree the default. The reason that we have auctions is, I suppose, is to create that sense of urgency. And in an ideal world, it's a fairly transparent process. You get to see all the other bidders, unless someone is bidding over the phone or something. But I suppose the main advantage is you just get a deal done. It's not a process that's really protracted and it goes on for weeks and you've got sort of multi-offers coming in and anything like that. Some of the downsides, well, in Sydney, it's pretty common to underquote the property price, or at least put a low price guide, and then you find out that the final auction price is often 10, 15, 20% higher. But I think to a certain extent, it's because it's the way it's always being done. If you go to buy property overseas, it's very often either private treaty, or if you get an auction, it's often quite dry. You might be in an auction house and it's like, right now we'll bid lot number one, and people, but it's not like the big sort of street theatre of auctioning the property out on the street in front of the property with this lovely ocean views or anything like that. So any advantages for a buyer about an auction, Amy?
Yeah, well, I think coming back to the initial question, which is why are so many properties in Sydney in particular, but it's also applicable to a lot of parts of Melbourne sold at auction. And that's just because you tend to have more buyers and more competition for these areas. And auctions are reliant on multiple people. Otherwise, what's the point? And they do just tend to be a bit more easier to facilitate when you've got so many, potential contenders, and the transparency, like you said. So that's the main advantage for an auction. I do think that there's this perception from a lot of buyers to say an auction is always going to go crazy. An auction is always going to go way over what the property is worth, because remember, there's a difference between the quote range and comparable sales. If you see it going well over the quote range, well, if you had done an appraisal on it, maybe it had sold for what it was supposed to, but just still well over the quote range. But the main key importance thing is transparency, and also very clear rules, clear structure around auctions in comparison to private sales, where the agent can run it however they want. There's no transparency. You might only get one offer. No, you don't know what other offers are. You might pay $50,000 more than someone else, or you might miss out by $1,000 when, if that had been transparent, you might have said, oh, probably would have gone a bit higher, but I didn't feel comfortable because I didn't know where the other offer was. So, and also everyone's bidding on the same terms, like everyone's unconditional. It's much less complicated. For example, Pete, if private sale, your offer's $1 million subject to finance and someone else's $980 subject to a building inspection, it's a bit more difficult for the agent to handle. And in that case, they're almost forced to do like a best and highest situation. But I certainly wouldn't be saying as a buyer to be, stressed about auctions or feeling like you don't want to go to auction because it's just going to go over and you've got no chance. There's pros and cons, and, certainly in regional areas or other states, it's a lot less common just because, A, they don't have that culture and the history of doing that. People aren't as used to it, as you've mentioned, Pete. And also they just might not have the depth of the market or the numbers of the buyers enough to justify doing it that way as well.
It's always interesting when the neighbours come along and then you get a bit of a crowd going and all of that kind of thing. I don't see the appeal myself, but maybe that's just because I do property during my working week, and the last thing I want to do is then go and look at an auction. But some people seem to enjoy getting a coffee.
I go for auctions for fun, Pete. What else am I going to do on a Saturday afternoon if I don't have any other work to do?
Yeah, maybe before I had kids, I don't know. But it seems like there's not enough hours in the week now.
I know.
Okay, here's a question for you. How much research is too much when buying a property, and at what point do you just pull the pin and go for it? Yeah, that's a good question. I suppose, some people are just very gung-ho and they're like, right, I've decided to buy a property, and they think they know what they're doing and they just pile in and buy something. And that's obviously not enough research, and they'll probably pay for it later on. But at the other end of the spectrum, there can be an analysis paralysis thing going on, because you start finding conflicting data points and then you end up doing nothing. And I suppose there's two different things. One is like a time period. If you end up researching for months and months on end, well, it starts to get counterproductive, because if the market's gone up a few percent and you've just sat there just sort of researching more and more things about crime rates and dwelling approvals and all the other stats and things, well, yeah, that's probably becomes counterproductive. So yeah, I think there's probably a sweet spot to try and find. I think a part of it comes down to understanding your personality type. I think if you a few years ago, a guy Steve Moriarty introduced me to the idea of the Enneagram assessment, and there's a certain personality type, the thinker analyzer, who would be a classic for overthinking things, and they want everything to be perfect. They want all the stats to line up, and they don't want any conflicting
Which you can't get
data.
In property, can you, Pete? That's
right.
Impossible.
There's always going to be a trade-off, isn't there? Like in an ideal world, we'd all buy the perfect property in our perfect dream suburb, but of course then you'll pay more. So so at what point do you think sort of doing good research becomes overkill and analysis paralysis?
Yeah, I think this is a good question. And the rest of the question says, I've been deep diving into reports, council data, price history, and I still feel like I'm missing something. At what point do you stop researching and just go for it? Curious to hear how others balance being informed versus overthinking everything. So to me, this sounds more like not necessarily the market research phase, which could be indefinite, that you could, and I would say you do the market research phase way before you're even ready to buy a property. Like that could be a 6-month plus thing. But then the actual property itself, the due diligence at the start is a combination of things that you can do for free, and basically like sitting on your couch at night time. You don't have to pay for these things. Like, you're going to have to pay for a building inspection at some point, hopefully, if you go for one. But then you've got other things. And the main categories I'd break it into is, first of all, figuring out what that property is worth. And then also doing things like online council checks, planning checks, calling the council, those kind of things, which again, you can do on the computer. It's driving around the areas as well and making some phone calls. So I would say probably would start off with doing your own appraisal on value, because if you do that and then you clearly see that this property has a very, very, very high chance of going over your budget based on recent comparable sales, maybe that's the point where you don't bother investing any more time. Or you might say, well, I'm going to do the other things first, because then if I see a red flag through my council research or my planning research, I'm not even going to take the time to do an appraisal. But all of those things, as soon as we have a client who has a property they want to go for and it's a green light, we do those things straight away, so that if there is an issue or a red flag, we can just move on. Otherwise, if you do it later on, you get emotionally invested, or you've spent time on a building inspection, and then you do those things, and then you uncover a red flag, or it's clearly going to go over budget, you've wasted money and time and emotional effort there.
Perfect. That's pretty sanguine and level-headed advice. Thanks, Amy. All right, here's a question that's right in your wheelhouse, because it's a Melbourne question. I'm a first-time buyer looking to buy an apartment. My budget is limited. I'm looking at 2-bedroom units with car spaces and near public transport, looking at suburbs like Kensington and Footscray. But so many people have told me I'll lose money buying a unit. If I wanted to buy a house, I'd have to basically go to the edge of town to afford it. So I understand that shorter buildings may be better for return on my investment, and maybe I should avoid amenities like lifts that could be expensive. So those are, some of the things you want to look for. I suppose, this is more sort of your area than mine, Amy. Funnily enough, I did look into buying a unit in Melbourne, so I did quite a lot of work on the thing, and then I ended up buying on the Sunshine Coast anyway. So it's probably not best place to advise on. I mean, the general thinking with this sort of stuff would say we're trying to target established properties and established suburbs. So that generally better than the CBD. They've got more amenities and stuff going on. The sorts of places I was looking at was places like Prahran, Elwood, St Kilda. And also, as you said, generally speaking anyway, that the returns on these types of properties have been not so good in the big generic high-rise towers, and they've been better in the smaller boutique blocks. But I think there's probably a bit of a recency bias thing going on here as well, because if up until 2020, people would have said exactly the same thing in Brisbane. It's like, you'll lose money if you buy a unit, you've got to buy a house. And then people who bought sort of well-located units in places like New Farm or Ascot or all those kind of similar suburbs in Brisbane have seen their prices absolutely rocket in the space of 5 years. And I think Melbourne has been overdue, I suppose. I think in a lot of cases, if you're buying for under 500,000, you're probably buying below the replacement cost of a new build. So, I think the timing's not necessarily a bad thing. But obviously, Amy, there's certain things you would want to look out for in terms of the quality of the building and also the DD.
Yeah, I'm a bit torn on this one. It's a very grey area, because we've got such a broad spectrum of apartments. You can't just say apartment and it covers, all of the different options here. But if we take a step back, this question has already pointed out something which is really important here, to say the alternative is that they buy something on the fringe of Melbourne or really far out, which isn't necessarily going to suit their lifestyle. So I think the overarching question here always needs to be why. That's the first thing you need in your property strategy, the why. Why are you buying this property? If it's because you really value housing security and you want to be in those areas, well, then that's your goal. That's your why. That's your overarching strategy. And if that's the type of property that fits into that strategy, well, then that's your option, because the alternative there is not necessarily going to work for this person. It's too far out. And then another alternative is to do nothing and just continue renting. But that doesn't tick that box of housing security, or it could be something like rent vesting. So really focusing on that why to start with. And I have seen plenty of amazing apartments. I've seen apartments do well with capital growth. I have an apartment in my own portfolio that has done relatively well considering what it is, but it is in an older style block. There's only 8 units, and that's very different to, as you've mentioned, Pete, like a high-rise one. And I have seen, because this person's budget is a bit more limited, sub 500, and they're looking for 2 bedrooms. In these areas, naturally, that is going to be in blocks which are very high rise. You can tend to have very high owners corporation fees, which can then eat into your cash flows over time. I've seen so many of these blocks with issues, cladding problems, water ingress problems, structural issues, which could then mean you end up with an asset or a property that you can't sell in the future or you have lost money on. So there is a scale on a spectrum of quality apartments to not so good ones. But again, you just need to work back to your why and say, well, if my overarching goal is to have this, I'm going to want to be here for 5 years. I don't want to have to move. I really value that. Is that worth then the risk of this property maybe not growing in value or costing you more over time? Obviously, that's a very personal thing you need to figure out.
Yeah, good point. Yeah, it's such a broad sort of brush sector of the market, isn't it? Apartments could cover anything from, really nice boutique apartments in an established suburb to, the 50th story of a massive tower block. And yeah, there's no one size fits all with this stuff. But there's a few pitfalls to avoid, that's for sure. Here's a question for you, buyer's agency question. Pre-settlement inspections, anything you wish you'd checked but you didn't think of and now regret? I'm going to be settling in a couple of weeks and I want to make sure I don't miss anything. Have you ever done a pre-settlement inspection and missed something that came back to bite you later? When I've been buying personally, right back in the day, I think sometimes things like inclusions, sometimes you kind of make an assumption that something is staying in the property, and then when you turn up, for the pre-settlement inspection, it's there, and then you end up settling and they've taken everything but the kitchen sink, so to speak. I think
Have you
it's often
that, Pete?
Oh, yeah, but this is, I'm talking like 25 years ago.
Oh, God.
And full caveat, I didn't know what the hell I was doing either.
Okay.
I think, you do get more experience about this stuff as you get older. I think, sometimes when you've got a limited time for a pre-settlement inspection, it's difficult to check everything, like whether every key works. If you've got a shed in the backyard and you're going to go around testing every key and things like that. Most of the big ticket items you should have covered off in your building and pest inspection. But it's some of those smaller and finer details that you don't necessarily find out until you move into a property and start testing everything, that you find little bits and pieces. Amy, anything you wish that you checked and didn't, and now you regret that? Does that happen?
Let's clarify the reason behind a pre-settlement inspection. A pre-settlement inspection is to confirm that that property is in the same condition as when you bought it. Any conditions in your contract have been fulfilled. So, for example, if you had agreed to any works being done, making sure that's been done. If you've got a clause in there to say, I don't know, all the rubbish in the garage is going to go, making sure that's been done. And then also the purpose of that as well is to, again, make sure anything included, which was in your contract. It has to have been noted in your contract to then be an inclusion. You can't say, I thought the cubby house was included, but it's not in the contract. So it's really just to make sure that what was originally agreed to is the same on settlement. The purpose of a pre-settlement inspection is not to go around and test every PowerPoint to see if they're working. If that was a concern of yours, you should have done that when you bought the property. Things like keys, yes, Pete, like that is actually more of an inconvenience. But unless you have a clause in your contract to say the vendor must provide every single key to every single window, you can't actually do anything about it. So I would say you take it as an opportunity to say, hey, Mr. Agent, Mrs. Agent, what are the keys involved here? And I'd probably go and change keys anyway. If I was moving into a new property, I'd go and change the front door locks and maybe the window locks, depending on the situation. So yeah, it's just, and this is where then as well, you've got your building inspection. Hopefully you've done one which has a lot of photos, and when I'm inspecting a property, I'll usually either take photos or a walkthrough video. Really high level, I'm walking around, and that just means if there is any damage on settlement, you're able to prove it. It can sometimes be hard if there's damage and you don't have any photos of that particular spot in the house through listing photos or anything, because the building inspector, bear in mind, will sometimes only take photos of actual issues, not necessarily of areas where there's not issues. So you're not necessarily going to have photos of every single thing. So videos can be really, really helpful when you're going through the process of buying a property. Make sure you ask the agent's permission to do it, just to have then at your final inspection as evidence if you need it. We almost never have issues on final inspections. We've been very lucky, but I have heard horror stories. And only once have I ever had a vendor take a dishwasher when they weren't supposed to. But because we'd written it in the contract, they had to put it back.
Everything but the kitchen sink, yeah. What was the old rule of thumb? If you turn the house upside down, if this stuff, everything that falls out might go with the vendor. But that's a good point. Fixtures and the difference between fixtures and fittings. So, for example, here in Melbourne, quite often you see this written under the goods in a contract to say all fixtures and fittings of a permanent nature as inspected. So a permanent nature is basically, if you turn the house upside down and shook it, anything that's not falling out. Like the dishwasher's not falling out because it's plumbed in. That's actually a perfect example. Yeah. So, okay, here's a related question actually on the analysis paralysis point. Overthinking minor defects on a building and pest inspection report.
It's not even a question; it's just a statement.
Is it?
But I get what they're coming at.
You're grammatically, you're correct. Yeah, I think. I mean, it's a bit like when you say to someone. If you meet someone and they say, "I've got a fear of flying," and then when you speak to them, and what are you thinking about? What are you visualizing? And when you hear what they're visualizing, it's like, a plane crashing and people crying at my funeral because my plane's exploded. And it's like, well, yeah, you probably would have a fear of flying. I think if you're overthinking minor defects on a building,
I love that this is your analogy, Pete, for minor defects on a building inspection, a plane crash with people.
Well, that's what it feels like, because in their own words here in the statement, not question, I'm overthinking. Quote, minor defects. So, you've already sort of diagnosed the issue here. They're minor issues, and you're overthinking them. But I know what they're saying. It's human nature. If you were to read a book and there's a typo in the first sentence, you're probably going to think, well, hang on, this is going to be absolutely loaded with typos, isn't it? And I think if somebody gets a building and pest inspection report with defects in it, it's kind of natural to think, okay, if these have got, these rooms or these areas have got defects, there's probably going to be other stuff as well. But how do you delineate between something that's a deal breaker, something that's just to be expected given the age of the property, and something that you just really need to accept is wear and tear?
Yeah, love this question/statement. So, I have had thousands. I'm not exaggerating. I've had thousands of building inspections for clients done over the last 13 years. So I've seen them all, and we have our inspectors we use quite often. So I'm really used to the way that they communicate and show things in their reports. But I've also used other random building inspections, clients, building inspectors. And what I will say is that a lot of building inspectors will classify things differently in their reports. Some of them will classify something as a major defect when really it's minor, and sometimes vice versa. So I think the main thing here is to, first of all, when you get your building inspection report, obviously read it and write down your questions, but very importantly is to speak to that building inspector, because they will give you context. I had one inspector recently, there was like 30 things in the major. And then when we spoke to him, he's like, oh, well, I have to put them as major, because even though it's only a little bit of wood rot, if you don't treat it, it could become a major issue in the problem. So it's not really a major problem now. Well, it's definitely not a major problem now, but it's just the way he categorized it made that report seem so much worse than it was. So speaking to an inspector is great, because then you can understand, okay, what are the genuine issues? What are the things I'm concerned about? What are the things I should be fixing now? What are the things that could wait? Why did you classify this as this? Overall, what did you think of this property in relation to its age? That's very important as well. And then they can't always, some of them will give you maybe ballpark costs. Oh, you need to fix this. It might be $5,000. Don't have to do it for a few years. Some of them won't give you costs at all. It's fair enough because that's really not their job, especially if it's like plumbing and electrical stuff. But this is where chatting to them by the end of that conversation, you'll have a much better idea around how to then interpret that information from that building inspection. Otherwise, yes, you might get a report. It's got 40 minor defects on there. It scares you off that property when in reality, they weren't that major. Squeaky door here and there, leaking tap, little bits and pieces.
And sometimes, as you said, if you're buying a terrace in Sydney, the balcony will be listed as a major risk just because you may be owning the property for the next few decades, and the building inspector almost has to put that in there as a way to cover themselves. But then when you discuss it with them in person, you get a different perspective. It's like, well, yes, it's a minor risk, but you may just need to watch this on an ongoing basis. And then you get a different perspective. If something's flagged as a major issue in a report, of course you'll naturally be sort of wary about it. But yeah, it's good to understand.
That's a good
what's
point,
a minor
Pete, actually.
defect?
Yeah, what you said before is they've got to cover themselves. So this is a key thing. They put in so many disclaimers in the report around what they can and can't look at. If they can't get into a certain area, they'd have to say, high risk of, inaccessibility, etc. But then also, especially my building inspector, there's a lot of statements that will be in there. For example, this is a minor defect, consult a structural engineer or consult a plumber or whatever. And when I speak to him, he's like, oh, no, I don't think you really need to get one. But he just has to put that in there because 10 years later, if someone has a problem and they go back to that building inspector, then he needs to be like, well, I put that in there because just say he had recommended something get fixed or someone gets consulted and that was a minor issue, but that person never fixed that. So, for example, it was a leak or a bit of wood rot or a little bit of wood rot on a balcony and they never fixed it. And then that became a major problem. And then that caused a safety issue and a problem later down the track. He has to cover himself to say, well, I flagged it. Even though it wasn't a problem at the time, it became an issue. So, yeah, it's just, it's all about perspective here, context.
Yeah, the world's getting more litigious potentially.
That's right.
So, you have to have disclaimers on everything these days. Okay, we've got time for maybe 2 more questions, then we'll wrap it up. Is it very difficult and expensive to renovate a fixer-upper in Sydney? I'm looking at a property in the mid-ones in Sydney eastern suburbs. These terraces come up from time to time. If renovated, it might be worth maybe $500K more. Buying into one, maybe my chance to buy a house in the area. You could save some stamp duty by buying for a lower price point, but is that a false economy? Are renovations difficult and expensive? And do many of these properties have heritage protections? Well, yes. I mean, so a few different things.
A lot of questions in that question, Pete.
Yeah, it's it's the opposite. Like this one's like a multi-purpose question rather than a statement. So yeah, a few things. Well, generally, yes, renovating in Sydney's east is pretty difficult and it can be expensive because there's a lot of people doing the same thing. There's a lot of demand for skilled tradies. It's logistically not that easy. I was watching a show on grand designs the other day.
There's your first problem.
I never watch property shows except for Kevin McLeod's one. And there was somebody doing a reno in Dover Heights, and they had to, they had cranes, and it was, it's a very hilly area, and that, logistically can be quite difficult because Sydney is quite a dense place. But also, yes, as you said, regulatory controls for older, if you've got a Victorian terrace or a heritage property. So there's a few things. You've got higher labour costs potentially, particularly at the moment. Materials are not necessarily cheap either. Sometimes with an older property, once you start renovating, you find things you hadn't really anticipated at the start.
Yeah, definitely.
You might find there's areas of damp or who knows what you might find in some of those older properties. So yeah, you've got to have a big contingency. I think the thing here as well is if it's going to take you 6 months to renovate, you've got to potentially then rent somewhere else to live, and the property itself is not rentable in that period. So there's some sort of extra
the holding
costs
a lot of people forget about because you've got to live somewhere else during that phase too.
That's right. And I think, maybe when interest rates were at 2%, it wasn't such a big deal. But if you're paying 6%, it might be quite a lot of a big deal because it sounds like you're stretching to get into this market. So those a few of the sort of hidden costs to look out for. I suppose on the plus side, generally those are high capital growth markets because there is a limited number of terraces. If you think about places like Paddington, Darlinghurst, Bondi Junction, there's not that many, or Surrey Hills, there's not that many terraces. So they've tended to do well from a capital growth point of view, but you do need to be a bit careful about the cash flow and also have a good contingency, because at the moment, almost everyone I'm speaking to who's doing a renovation, including myself, is massively overrunning. So,
I know,
yeah, what would you say, Amy?
Yeah, it's just one of those eyes wide open situations where if you're going to buy something that needs a reno, you really need to start researching and having a think about costs involved here and time. And there's a big difference between a cosmetic renovation where you can just keep everything as is, maybe do new kitchens, bathrooms, paints, carpet. You can figure that cost out like somewhat easily. You figure out how many square meters of carpet you need and how much per square meter it's going to cost. Maybe call a few kitchen companies. Hey, ballpark, what have you been doing this for recently? But then when it comes to things like structural work, extensions, changing floor plans, that's where it can become a lot harder, because until you have the design, then it can be hard to go to a builder and get a quote. You can still call around and try and get some examples of recent extensions and renos from other builders. They might be hesitant to give you this information. It's a little bit trickier. And then also when it comes to things like heritage or any kind of overlays on that property, which would then require a council permit, there's a question around how long is that going to take? It could be a little bit more restrictive, not necessarily if you're doing stuff just inside the property, just changing floor plans, but going up or extending, if you're going to impact the facade or the look of that property from the street. If it's heritage, definitely an extra layer on top of all of this. So like you said, Pete, generally it will cost more than you expect, especially with these old houses. Once you start doing repairs to foundations, you've got party walls, you've got really old roofs in a lot of cases, sometimes rising damp that you've got to address. So leaving a big bucket there, and having done a few renovations myself and learning as I went, every time I do it, I still learn more stuff. And I think, I wish I knew that before. I wish I thought of that before.
Yeah, I mean, I think almost every major renovation, things will not go exactly as you plan, but you just have to correct course as you go along, and definitely have a contingency in place, because there'll be stuff comes up that you haven't thought about for sure. Okay,
and then selling a property where you've done a half reno, not good luck with that. That would be worst case scenario.
Yeah, it raises a lot of question marks then, doesn't it, for the buyer? So,
I know, buyer, if you're selling a property, I saw one, Pete, recently, they'd run out of money. That property didn't have a kitchen, half a bathroom. So hard to sell that, because a bank's not going to be excited about lending to that for a new purchase. So you're really, really restrictive with who you can then sell that to.
Yeah, well, that's pretty topical, actually, because our final question is actually about bank valuation. So I just wanted to understand the difference between an in-person and a desktop valuation. We've been successful with our offer, waiting for bank approval. They've come back asking for an in-person valuation. I've been told it's being done tomorrow. So, yeah, I'm trying to think of an analogy here, Amy. Like many years ago, before I was in real estate, I used to work for one of the big accounting firms, and we used to do audits of big companies. And if you have a big listed company and they've got a tiny subsidiary, well, you're not going to send a load of staff out there to do a detailed in-person audit. It's not worth it, because it costs a lot of money. It's not material. It's not going to move the needle. So I suppose the idea generally is that a desktop valuation, when that's being done, is quick. And it's very cost effective, because you can do it in 5 minutes, really. And it's just based on the available data. And that's generally used if you've just got a low risk lending scenario, there's loads of similar properties nearby, or if you're just doing sort of a general analysis of the market. A full valuation is a bit different, because it's sending somebody out to do a physical inspection. So they're going to look at the condition of the property, maybe some of the period features, or they might want to see that the property's structurally safe or sound. And it's obviously a more reliable it's a more thorough process. The downside, of course, is it can take a bit longer. It can take sometimes several days to get back the full valuation. In really busy times, it can take even longer than that. So I think, so it depends on the situation in question. If it's a very generic type of property, and considered low risk, then a desktop valuation may well be the appropriate way for a bank to go. But if it's sometimes if it's a higher loan to value ratio, or if it's a property without many sort of immediately comparable sales, they'll send somebody out to do a full valuation. It's not necessarily a problem. It's just a more thorough part of the process. So
it's a different method. And I think that's important to understand as well, that all pre-approvals are subject to a bank valuation. So in other words, when you buy a property, you can't actually get formal finance approval until a valuation is conducted, even if you bid at auction. I know it's a little bit scary because you think, what if there's a problem later on? So, and that's because if the valuation comes in lower than your purchase price, then you do have to potentially chip in some extra money, increase your loan amount, maybe go to another bank. Valuation shortfalls are rare in my experience, but not impossible. But there are banks, and I don't know how it all works behind the scenes, but sometimes if you buy a property, the system, call it the system, whatever's happening behind the scenes will just say, yep, happy to take it at contract price, or desktop valuation. It's just like a little computer algorithm that's happening in the background. Computer says yes, no problem. But sometimes there's metrics behind the scenes which will then just trigger a physical valuation. So the system will say, no, we have to send someone out to have a look at this property. Like you said, Pete, maybe there hasn't been many comps. Maybe it's been sold off market, so there's nothing online, not enough statistics online for the computer to just do the desktop. So someone's actually going out there as well. And as you've mentioned, it can just take a bit more time. They got to get out there. I think they've got what is it called? Deadlines and stuff, like 24 hours or 48 hours before they have to then get the report back. But this is also important to understand. If you're making your property subject to finance and you require a full valuation, well, that's a step in the process which can take time. So if you're doing a finance clause for 5 business days and you need a full valuation, that's cutting it fine by the time the valuer goes out, comes back, does their report, gives it to the credit assessors, they have to sign it off. That could be tight. So speak to your mortgage broker or your lender if you're worried about any kind of valuation risk shortfall or timeframes or anything like that. I always say to clients before we put an offer in on the property, or talk to their broker and say, in the very unlikely event of a bank val shortfall, what would the client's options be? And I've had, just for context, maybe 4 or 5 times in like over 1,600 purchases. Like it's very rare that happens, but not impossible.
Yeah, I think when I think back over the years, maybe a few times. I think once when we've used a non-bank lender and they were a bit twitchy. There was, I think, during the Banking Royal Commission, a couple of times when banks just completely changed their policies on the types of properties they would lend on. But yeah, I think it's probably a bigger risk in an off-the-plan scenario, and we don't really do much of that. But
especially
it's not really our
because
space.
when you buy it versus when you get the valuation, it could be, if it hasn't been built yet, it could be years in the future. The whole market could have changed. Yeah.
Yeah,
point, Pete.
but fairly uncommon. As you say, at auction, it's usually a fairly transparent process. So the purchase price is the price most often, but not impossible though. So I think that's all we've got time for, Amy. We've covered a decent breadth of questions there. So any plans for this weekend?
I'll just be sitting out in my lawn, admiring my garden.
Watching it grow back. That's good to know. Yeah,
exactly. And of course, auctions on Saturday, every Saturday.
Yeah, fair enough. Yeah, it's a pretty quiet one for me. Just got a kids' play day, got some friends coming up from the Gold Coast, so that'll keep me busy. And of course, like yourself, got some properties to look at on Saturday. So not too many weeks left now until Christmas either. So do send in all your questions. We'd love to cover anything you're interested to hear. And thanks, Amy, for covering all that stuff so brilliantly as always.
Thanks, Pete. See you next time.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.